Hello and welcome to This Week in Bitcoin. There's a lot of stuff that happened this week. Some is a little bit technical feed, some is a media story. So let's get stuck in right away. News number one are a media report from the Financial Times. And the Financial Times is usually a very established economics newspaper, financial newspaper. And they have had a little bit of an oopsie, I would say. Since 2011, the Financial Times has been covering Bitcoin, so they had enough time to understand it. And from the looks of it, they didn't really grasp the full picture. In a 28-minute documentary about MicroStrategy, why it's performing so well and what it has to do with Bitcoin, the reporter Katie Martin, also in the Bitcoin community known as a little bit or a strong Bitcoin skeptic at this point, tried to explain to the audience why essentially MicroStrategy has been performing well, but this has nothing to do with Bitcoin. This is more of perception, and that Bitcoin is actually not as scarce as you might think. This led to a brilliant meme template, she said in the clip, where she stated she also has her own teeth. They're very scarce, no one has them, but they're not worth $1 billion. Dear Katie, I think you're missing the big picture here, because at the end of the day, there are a lot of opportunity costs involved in Bitcoin that make it such appealing. For companies such as Strategy, for example, it's the appeal that you can actually use it instead of a cash reserve, whether that be with cash directly on the balance sheet or with T-bills or anything like that, treasury bills at this point. Bitcoin is actually outperforming everything of that. And because it has that mechanism, companies like MicroStrategy use it to essentially back their company and started creating a Bitcoin strategy. This incident shows a little bit more of the issue we still have going on. It's better than it was before with the media, especially the mainstream financial media, but they still haven't grasped the full picture of Bitcoin. However, these incidents are often a good opportunity to educate them, and who knows, maybe in the future the Financial Times will finally get Bitcoin. Second news are of a technical feed, and that is everything to do with Bitcoin Core. In case you didn't know, Bitcoin Core is the essential software which determines what is happening in Bitcoin. It's used on your nodes, it's used to verify the stuff, and on the Bitcoin Core GitHub page you also see the BIPs, the Bitcoin improvement protocols, to continuously make Bitcoin as a software and therefore as a network better. There is something that's called the op return limit, and this is essentially a limit that is there set in place to determine how much data goes into a Bitcoin transaction. There's now an ongoing debate within the technology part of Bitcoin where people discuss, does it make sense to actually get rid of this limit so that you can use Bitcoin for more than just a monetary network, essentially storing data on the Bitcoin blockchain, which then leads to stuff like ordinals, NFTs, or other use cases. There is a very strong debate within the developer community to say, no, the intent behind Bitcoin, as Satoshi stated, was to have a monetary network, and monetary transactions are sending value from point A to point B, and that has a certain limit. If we now fill the blockchain with additional data, you would have an issue because nodes would become bigger, it's harder to maintain, and all of the known factors, especially increasing transaction costs. As a counterbalance, a very popular former developer, core developer, Luke Dasher, I'm hoping I'm not butchering his name, has come up with his own implementation called Bitcoin Knots. In there, he is stating that he has found a way to essentially filter these additional data points and to not allow it if you run Bitcoin Knots on your node and if you verify it this way in the network. The great thing about Bitcoin is you can have the option, you can choose either or. But that is a heavy debate because Knots is now at 9% of the total usage with nodes. And there are a few points for both sides. On the one hand, Knots does filter and does only allow monetary stuff. So that is what Core used to be. However, on the other side, it's maintained by one guy, by Luke himself. And in the past, he hasn't been really, let's call it safely with the way he secures his setup. He famously lost over 300 Bitcoin because his private key was stolen. The great thing about Bitcoin is, as always, the market will determine which implementation is the right one. And considering, apart from the debate with op return, there are a few people in the space who also say, even if you use Knots, there is still not a way to get rid of stuff like NFTs and ordinals. We will wait to see which one of the two implementation plays out, but for now, it's an ongoing discussion. And lastly, we also take a little bit more of a financial data point here with the global M2 money expansion chart compared to Bitcoin. And if you look at this, there is a fascinating point that Bitcoin has been tracking that expansion, mainly money printing, to ease the system with liquidity and to therefore get better returns and, to really stimulate the economy. It has been following that chart in a 2 to 3 month ratio. Meaning, whenever the chart was going up, Bitcoin was usually later to follow. And this led now to many people seeing Bitcoin with new all-time highs in the future because that money expansion is continuously growing. Well, there have also been times where Bitcoin was very slow to react, so this is not a guarantee that anything like this will happen again. However, it's an interesting time to see if that continuous money expansion and that liquidity, which gets flooded into the system, also finds its way to Bitcoin. And with that, we're at the end of this week in Bitcoin. You know the drill. If you got questions, feedback, or just want to say hello, leave me a comment below, and I look forward to seeing you next time again.